Good morning, everyone. You're all very welcome to the Monday preview for the week ahead. I suppose on the surface of it and on face value, we've had a very, very turbulent day for some of the markets, which we'll be going through shortly. Thursday evening into Friday saw a significant wave of declines in the indices, and we saw that continue to transpire over the weekend as we saw more news emerging regarding the COVID lockdowns, with deaths and cases in China rising rapidly. Now, of course, this isn't something that we should be directly saying this is fresh news. It's not really, as we have been reading articles, we've been looking at news developments regarding China for the last number of weeks, mainly the last 2 or 3 weeks, but it's now getting to a stage where it's a little bit more widespread, systemic, and leading to higher cases, broadly speaking, across China. As a direct result, that obviously has inverted correlations to the markets. Why? Because Chinese markets slowing down, lockdowns will again bring back the problems related to supply chain issues, shortages. Obviously, with the Chinese economy slowing down during this period, we also have to factor that into consideration. And I believe that's one of the primary reasons why we're seeing the indices now continue to get hit again, albeit maybe at a delayed response. When we look at the economic calendar for the week ahead, again, another fairly data-heavy week ahead. As we take it through day by day. Today's we have the Chicago Fed National Activity Index today, which I believe will be one to keep an eye on. We have got Macklem and Rogers speaking out of the Bank of Canada, and we've got ECB's Paretta also speaking today. Mondays tend to be the quiet week, but again, you have to factor into consideration this is the last full week before we have the April markets close, as Friday the 29th this week will be month end. So we do have to factor that into consideration. So we do have a month end on Friday as well to bear in mind. Tuesday, again, we've got a raft of data out of the US between kind of 12 and 2 into the opens. And we obviously have BOSP's, the Lane speech as well coming out, which is obviously something to take into consideration. Now, Wednesday does bring in a little bit more data. Wednesday and Thursday, traditionally speaking, are the most data heavy days of the week. We've got a raft of data overnight in Australia. We've got BOG outlook reports. So that'll be interesting to see because, of course, as we've seen in the FX markets, how the Japanese yen has been weakened against the other major G7, G10 FX counterparts. So again, that could be one to keep an eye out if you trade the specific pairs. Wednesday afternoon, of course, we've got a raft of data again in Europe, US, Canada, right through the course of the afternoon, with, of course, fundamentals being taken into consideration. Overnight, we do have Kiwi trade balance and imports and exports figures with further Japanese figures. And I suppose as a day trading perspective on Wednesday, I will be paying particularly close attention to Lagarde's speech, because we do have two. One I suspect will probably be recorded, but we do have Lagarde speaking prominently on Wednesday as well. As we turn our attention then to Thursday, very, very quickly, we have again a number of data points this week. In Europe, we've got De Guindo's speech on Thursday morning. We've got business climate, consumer confidence. That will obviously be interesting to watch, because if these are revised lower, we should see weaker indices on Thursday morning. So again, factor that into consideration. And of course, the big one on Thursday, GDP figures. Okay, we've seen GDP figures being constantly revised down in the US. Now, of course, that leads to the idea of recession risk being a little bit more amplified. So of course, we do have to factor that into consideration. So Thursday's GDP figures will be one to keep a very, very close eye on. And then into the close of the week on Friday, we have got GDP out in Germany, France, Europe, broadly speaking, with basically a raft of data pretty much across all the major European zones, and the Eurozone, broadly speaking, as an amalgamation. We do have some data out of Switzerland as well, so worth paying that into consideration. And of course, the Chinese Shenzhen Manufacturing Index as well. Of course, with the COVID outlooks, with the lockdowns, this could be a bad number. If this is a bad number, under 50 is generally speaking is recessionary. That would mean that this would be bad for indices as well. So there's a lot of negative or downside risks in the markets this week, particularly from a data and fundamental perspective. And it is important to take this into consideration. Now, of course, into the weekly close, as I said, we do have a raft of GDP data. We do have a number of other pieces of data coming out in the US as well. Purchasing Managers Index in Chicago, Michigan Consumer Sentiment, always ones to keep an eye on as well for leading indications of performance within the US-based economy. And of course, last but not least, on Friday night into Saturday morning, we do have more manufacturing PMIs in China as well. So even some of these are being revised lower underneath the 50 mark. So again, very, very close to keep an eye on that. Now, as we progress to the charts this week, of course, since we looked at our charts last week, we had, I'd marked some levels here at 45.06 on the S&Ps. We came in to test that to the T, and the price action has since wallowed lower very, very significantly to Thursday into Friday, and the price action has continued to open lower down here. Now, at this point in time, personally, from my own personal viewpoint, I will be looking for the price action to potentially revisit these lows down here. We are a little bit above that range at the moment, so there is a little bit more downside potentially coming. Just factor that into consideration from an SMC perspective. We do have an area around here. We do have a clustered set of lows down here as well around the 41.50 handle. So we can see how the markets have pretty much inverted off of what's been a very, very up and down number of extended weeks of price action. Now, of course, if we look at the NASDAQ again, NASDAQ tends to be the one that's heaviest hit, and we are coming in to retest these lows again. Massive sell-off from this key level. We had a bit of consolidation up here Thursday, and Friday saw a raft of sell-off down to the downside again after a break on Thursday evening into the close. Friday lower, Monday also moving lower. Price action imminently coming into this 13,100 level that I am watching very, very closely. And we can even see again here consolidations, rejections, price actions moving lower. So very, very clear short-term intermittent selling coming in here in the NASDAQ as well. And of course, let's just look at the Dow Jones. Firstly, speaking on the Dow Jones, if we transpire up to the daily, this key daily level up here that I had at around about 34,480, 34,500 was met to the wick on Thursday. Wick rejection, price action sold off. Friday with that elongated sell-off, we've broken through this 34,000 handle, which was a kind of a nice price action level, and we've continued to propel ourselves lower. At this point in time, again, I think there's a little bit more downside on the Dow Jones in comparison to its counterparts. We've got an area down here in this region between, I suppose, 32,200 to 32,800 is what I would be expecting. And even still, that's another 600-700 point potential decline coming into these markets as well. So just watching, wait and see. Price action extremely volatile Thursday and Friday. I was away personally. I wasn't able to kind of get into these positions. However, it's important to be able to come back, upload the charts, see where the price action is currently playing at, and marking up your entries accordingly for your own potential positions for the strategies that you're obviously implementing. Of course, gold has wallowed right back through this 1930 handle, and again back into testing these lows, which again shows the volatility in these gold pairs, where we elongated into the 2000 barrier, and all of a sudden now we're back into this 1900 range again. So again, watch the volatility. Volatility is rife in both directions at the moment. It's not just to the upside, it's very much to the downside as well. So you do have to factor that into consideration, particularly for these funded programs within your risk management. All right, so everyone, we will be back on Friday to do a recap of the volatility this week. Trade safe, use your risk management, and we will see you on Friday. Have a lovely week.